Welcome to today's lesson. In today's lesson, we will be looking at budgeting using Sage 50. Before we go into Sage 50, I want you to picture this. Picture a ship that is navigating through unpredictable waters. You will agree with me that without a well-charted course, the ship will risk running aground. Similarly, businesses without proper budgeting may drift aimlessly, unable to seize opportunities or avert disaster. So today, I will equip you with the skills to steer your business towards success through effective financial planning. And that is what budgeting is all about. The lesson overview for this very lesson. First, we'll be looking at how to create a budget within Sage 50. Secondly, we will be looking at how to analyze what we call variance and financial performance. And we'll be looking lastly on how to utilize this tool for business planning. But before we delve into the subject matter, what is budgeting? Now, the word budgeting is derived from the word budget. And when we talk about budgets, a budget is a financial plan that outlines expected income and expenditures over a specific period. It acts as a roadmap for financial decision making. And of course, if you're looking directly on my screen, you will find out that you are seeing a slide. And this slide breaks down the budget for you. Here you have to manage your spending and also manage your saving. If you look at the pie charts, which utilizes slides, you will see that it's being divided, breaking down the 100%. Where we have 50% for essentials and also 20% for financial goals and also 30% flexible. And you can see medical, food, items like housing makes up 50% essentials. Financial goals, we have savings, retirement, flexible, we have vacation, eating out. And this is divided into the what, the why. When you come over to the why, you'll see where your money goes. Limit spending. So the why is just talking about why. Why does budget matter? Budget matters because with a budget, you will see where your money goes. With a budget, you'll be able to limit your spending. With a budget, you'll be able to save more. With a budget, you'll be able to fund big picture goals. So budget is important. It's important. What? It can be monthly plan, could be for saving, could be for spending. We also have the rule of thumb, the 50, 20, 30 recommended ratio. And that's what we have here on this slide. Now, what is budgeting? I want you to imagine you are planning a party. You know how much money you have to spend. So you make a list of everything you need. Food, a list for drinks, decorations, and so on. And figure out how much each will cost. You make sure your spending stays within your budgets, so you don't run out of money. That is what budgeting is. Budgeting is about creating a plan for how you will spend your money. You think about your income, how much money you earn, and your expenses, what you need to spend money on. Is it for shopping? Is it for vacation? Is it for eating out? The goal is to make sure your expenses don't exceed your income. This helps you avoid debt and save money for things you want or need in the future. Budgeting is a crucial financial management tool used to forecast and control income, expenses, and cash flow over a specific period. It involves creating a detailed plan that outlines expected revenues and expenditures, enabling businesses to make informed decisions about resource allocation and financial performance. So, therefore, we'll now go into stage 50 to see how we will develop a budget. I hope you understand. I hope you understand, because budget is very important. Even when we talk about government as well as nation building is concerned, for example, I can use my country, Nigeria, as a case study to talk about budgets as well as the importance of budgets. Now, by this, budgeting is important for a brighter Nigeria. Your country, budgeting is important for a brighter country. Nigeria, which is my country, is a resource-rich nation with immense potential. Although has been facing certain challenges like poverty and all others. Now, to address these pressing issues and foster sustainable development, the government decides to implement a comprehensive national development plan. That plan is a budget, and those of us who are Nigerians knows that every year the federal government presents it. So this is also important as far as nation building is concerned. So effective budgeting is essential even for national development. Every country must set clear priorities, must allocate resources strategically, ensuring transparency and monitoring performance. And that's a good way in which the government can make significant progress in addressing the nation's challenges and building a brighter future for its citizens. You ask me, sir, what are the importance of budgeting? And I will give you three importance. That's one, budgeting provides a clear picture of financial health. Two, budgeting helps in setting realistic financial goals. Three, budgeting aids in resource allocation and prioritization. You ask me, sir, why does budgeting matter? And I will tell you that budgeting matters. And one of the reasons is because budgets are essential for effective financial management. From all what we have seen here and all what I've said, you agree with me that they set expectations for income and expenses, providing a framework for decision-making and resource allocation. So now we'll go into Sage, and I will take you on a journey into the steps to create a budget in Sage 50. I want us to utilize the case study of Mira Global Services Limited. And let's say Mira Global Services Limited plans to launch a new service. They might allocate a budget of 5 million naira for marketing, 2 million naira for staffing, and 3 million naira for operational costs. This structured approach helps them allocate resources wisely. But let's assume you are the accountant and you're told to create the budget with these values. What are the steps you are to take? I'm going to share 4 steps, and with it, you can create a successful budget. Let's go. Steps to create a budget in Sage 50. Step 1, navigate to the budgeting section. Open your Sage 50 and go to the maintain menu. Select budget. The screen opens on a new window called maintain budget. The first thing you have to do here is to come towards your right and choose the fiscal year for which you are budgeting. So you click and select the fiscal year. I'm selecting 1st of January 2024 to 31st of December 2024. Come towards your left, account filter section. You have to specify what type of budget. If it's maybe you want to enter an estimated revenue and expenses for each category, each account, then you have to select all accounts. If it's just for your income statement account, you select income statement account. If it's for your inventory, you select inventory accounts. If it's for your income only, you select income. After you've done this, step 3 is for you to impute the data. So let's say we are working on an expense budget only. So change this type to expenses. So step 1, you navigate to maintain menu and open your budget. Step 2 is to change the fiscal year and also the account filters as per your requirement. Step 3, you are to enter or impute your data. You enter all your estimated expenses for each category. Let's say Mira Global Services Limited plans to launch a new service. They might allocate a budget of 5 million naira for marketing. What do you do as the accountant? You will come here. If it's for months, based on a rolling budget type, you locate where you have the accounts for advertising and expenses, which is this. So let's say this is for the month of September. So I'll come over here and enter 5 million. Let's also say they also allocated 2 million naira for medical supplies. So I'll also move to medical supplies and enter 2 million naira. And let's also say Mira Global Services Limited allocated 3 million naira for other operational costs. For instance, let's say fuel and maintenance. Though we know fuel is an overhead, so it's subject to adjustments, but we can also do that. What do? We'll come also still on September, month of September, fuel and maintenance will provide 3 million. And here we have it as our total. So this is similar to what you have to do. Spread it across to all other months. And you can also expand this just in case it's looking a bit too tiny. So you can expand it across for all. So step 3 have been done. Meanwhile, there are times when you want to adjust. For example, certain expenses like fuel, which is an overhead, which you know might be increase in price, which can definitely affect it. It's subject to change. So when you want to adjust, all you have to do is to come to the Edit tab at the top. You'll see Adjust Amounts. So when you click on it, to be asking you after you've selected that, okay, how do you want to adjust this amount? So maybe you want to adjust it by a particular percent, maybe by 5%, you say 5%. Then you can also round the amount to the nearest 100 or 1,000, and then you say, okay. So that's how we adjust. So if we come over and click on Adjust Amounts for that of fuel, so let's say 5%, we'll say in percent, not dollars, say okay. And you can see that the fuel and maintenance budgeted amount was initially 3 million, but now it's 3,150,000 naira. You want to import a budget, maybe it's on a CSV file format, you have to use the import at the top. If you want to print this budget, you use print. You want to view quick reports, you come to the report section and be able to view them. For your budget report, your account variance, and also you want to drop a note, you can do that here. You want to export this to Excel, you want to autofill to other sections, you can also do this. When you click on the autofill, it brings this window asking you, how would you like to fill in this budget? So if I want to fill this amount across others, that's what I will do. It's a two-way thing. Either you come through the tab there, where you click on autofill, or you come over to edit and choose fill in budget amounts. By the time you do that, to bring this window, you can see now. So I will select copy amounts from this open budget and fill it across. So I will choose next. Select the period to copy. Which period? Can say all. From the beginning, what period to what period? So I'll come down and say from 1st of January to 31st of December 2024. This way. So you can see the start and the end. And I can come over and click finish. Then I'll be able to say, oh, let me copy this and then take back that step and I'll be able to fill it. So you can base your estimates on historical data as well. Historical data means when I clicked on edit, fill in budget amounts, you find that first option talks about use actual amounts from Sage 50. That's historical. Could be market research. So all I'm trying to say in step 3, you have to enter estimated revenue and expenses for each category. Categories like sales, categories like marketing, categories like administration. Once you're done, you are to come to the top and click on save. So you save your budget and review the figures for accuracy. Now, let's talk about analyzing variance and financial performance. What are variance? Variance are the difference between budgeted and actual figures. If I go back to the budget window, all of these amounts we have here are the budgeted amounts. The actual figures is what is actually spent. So analyzing this variance helps businesses understand their financial performance and adjust strategies accordingly. Here in accounting, we have what we call favorable variance and adverse variance. We say the variance, which is the difference between what we have budgeted and what we actually spent, is favorable if what we actually spent is lesser than what we budgeted. So imagine a situation where at the end of the month, we ended up spending 3 million for advertising instead of 5 million that was budgeted. That means the variance is favorable. But where what we actually spent is greater than what we budgeted, we said that the variance is an adverse variance. So like I said, analyzing this variance helps businesses understand their financial performance and adjust strategies accordingly. So what are the steps on how to analyze your variance? But before we talk about the steps, why is variance analysis important? The first reason it is important is because it helps you identify areas for improvement. Secondly, it aids in understanding spending patterns. Thirdly, it supports strategic adjustments. So now, how do we analyze our variance in Sage 50? Step 1, go to your reports menu. Step 2, now when you come to your reports menu, when you come down, click on financial reports. Scroll down to company reports. You will see that we are having our audit trail reports and as well as our fine transactions reports. So if we come back to our general ledger, you will now find the accounts variance reports and the budget reports. So you are to open the budget reports. When you open the budget report, it gives you an insight into the budgets. And you can see our budget is clearly stated of 10,150,000 for medical supplies, fuel and maintenance, advertising and marketing. You can set the range for your budgets. To do that, you come to options. On the new window, you change the dates. Maybe you're looking at all or a range. You can change it. You can set the range. Once you've set it, maybe from so-so months to so-so months, then you come down and click on what? Okay. Once you're done, you can print this out using the print option here. And you can also email this. But we cannot completely analyze without comparing the budgeted with the actual. To do this, let's first of all post transactions, because when we go to the account variance, we can see here that yes, we have our budgeted, which is majorly for medical supplies. You can see over there. You can see clearly here, fuel and maintenance, where we budgeted 3,150,000. I hope you can see that. Advertisements, where we budgeted 5 million naira. So let's pick up an example. Let's assume that we made a payment of 4 million naira to Giant Travel Tours Limited to help us run an advertisement campaign. How do we record that expense? To record it, we use what we call write check. Each time you want to record expenses incurred and paid immediately, you use write check. But for expenses incurred and to be paid later on a later date, we use enter bill to enter it as a bill. Then whenever we are paying, we use pay bill. But for this very one, we are saying that we made the payment immediately. So we are going to use write check. Write check is found on your tax menu. You come down, you see write check after payment. Or on your vendor and purchases, you see write check here. So whichever you want to use. So I will use from tax, it's the same. I will go to tax menu, come down to write check. The first information it asks on the window is who is the customer or who is the vendor you're actually making these payments to. So we'll come here and select that the vendor is Giant Travel Tours Limited. Sorry, it's vendor, not customer. Now you can see the name have appeared. So you come to this box, here we have dollar, that's where you put the amount. We said 4 million. You specify the date. You say September 20th, 2024. You provide a check number. Payment method indicates which bank for this money paid from. We'll come select First Bank. So once we are done with this memo, you say being payments for advertisements, being payments for advertisements. Once you're done with this, you click save. These are how we record expenses incurred and paid for immediately. Now that we have recorded this for September, we can now analyze our variance because we now have a spending. So to do this, we'll go back to our report and forms. So we'll come down and choose our financial statements, or if you don't want to go through that, choose your general ledger. When you open your general ledger, you'll now find our account variance. So open our account variance. So now that we have opened this, we'll then scroll down to that very account, which is for advertisements. So I'm going to scroll and look for it. So another thing you can do, like I said, is to come to options and change the range. So say the range. Come here and select September to September 30th of September. Now, what do we want to do? we want to analyze our variance. So you come down to where we have variance calculation here and select it. You select budget versus actual. You have three options. We have actual versus budget. We have budget versus actual. We have favorable versus unfavorable. So what you choose is budget versus actual. That's what you select. I mean here. That's what you select over here. Budget actual. Once you have done this, you can then come down and click on OK. And you figure out first that when you look at the header, what we have is Mira Global Services Limited account variance for the period from September 1st, 2024 to September 30th, 2024. And when you look in to the budget, you figure out that we have many accounts appearing. So what do? You have to navigate below to your own budgets, budgeted accounts. So we have our advertising and marketing. So you can see it here that the actual amount, what we spent, is 4 million. While what we budgeted is 5 million. And I told us that for variance, we have favorable variance and adverse variance, which is unfavorable. And that's where a situation where your actual amount, what you actually spent that month, is lower than what you budgeted. That variance, which is the difference, is said to be what? Favorable, because we spent lower than what we budgeted. So we have 1 million naira balance left. But situation 2 is when your actual amount spent is greater than your budgeted amount. That is an unfavorable variance, which means that variance is unfavorable. It's an adverse variance. So you must be able to generate this report to compare budgeted versus actual figures. You have to review your variances, paying attention to significant differences. And when you're done, it's important to discuss these findings with your team to identify reasons for variances and make necessary adjustments. So I would want you to apply what you have learned. Apply it as you practice. Apply it to Mira Global Services Limited case study with you. And like I told you, imagine Mira is planning to expand its operations and needs to create a budget for the upcoming fiscal year. Imagine the company where you work. They will estimate revenues from their services. And by analyzing variances from the previous year's budget, they can identify any discrepancies and areas for improvements. This is important. That's the more reason why I stated clearly the importance of budgeting. And you must know that these skills are vital for effective financial management and strategic planning in any organization. So therefore, if we look at this carefully, we may say, for example, if our advertisement costs exceed the budget, the management of this company may need to reconsider the advertising strategy. So in today's lesson, You have learned how to create budgets and how to analyze variances. As you progress in your careers, remember that budgeting are not just numbers on a spreadsheet. They are powerful tools that empower you to steer your organization towards success. Please embrace these techniques and you will navigate the complex waters of business with confidence. Thank you for your attention, and I look forward to our next lesson together.